Look, I'm going to show you something that's happening right now in real time that most people won't understand until it's too late. And by then, the opportunity will be gone. Gold just hit an all-time high. Silver just hit an all-time high. And this isn't some random spike. This is the beginning of something much bigger, something that's been building for years, and it's finally breaking through the surface. Let me paint you a picture of what's actually happening behind the scenes. Central banks around the world just purchased 220 tons of gold in a single quarter. That's a 28% increase from the previous quarter. Think about that for a second. These are the institutions that print money. They control currencies, they set interest rates, and they're dumping their own paper currencies to buy physical gold at the fastest pace we've seen in decades. Why would they do that? What do they know that you don't? Here's what's really going on. The global monetary system is going through a transformation. Not tomorrow. Not next year. Right now. And the evidence is everywhere if you know where to look. Gold is up 68% this year. Silver is up 140%. These aren't normal moves. These are the kind of moves you see when something fundamental is shifting in the financial system, when the rules of the game are changing. And the institutions know it. That's why they're positioning themselves right now, while most retail investors are still sitting on the sidelines, wondering if they should wait for a pullback. Let me tell you what happened in 1971. Nixon closed the gold window. He severed the last link between the dollar and gold, and for a while nothing seemed to change. People went about their business. The stock market kept going up. Everything seemed fine. But then something interesting happened. Gold, which had been fixed at $35 an ounce, started to move. Slowly at first, then faster. By 1980, it had reached $850 an ounce. That's a 2,300% increase in less than a decade. The people who understood what was happening in 1971 positioned themselves early. They didn't wait for confirmation. They didn't wait for the mainstream media to tell them it was okay to buy. They saw the writing on the wall, and they acted. And here's the thing. We're in a similar moment right now. Except this time, it's not just the United States making changes to the monetary system. It's the entire world. China and Russia have been accumulating gold for years. They're not doing this because they think it's a good investment. They're doing this because they're building an alternative to the dollar-based system. They're creating a new financial architecture, and gold is the foundation. The BRICS nations just announced they're working on a new currency, a currency that will be backed by commodities, by real assets, not by the full faith and credit of a government, but by actual physical resources. Now you might be thinking, okay, but what does this have to do with me? I'm not a central bank. I'm not Russia or China. I'm just trying to protect my retirement and maybe make some money. And that's exactly my point. Because what happens when the world's reserve currency starts to lose its status? What happens when countries around the world start settling trade in something other than dollars? All those dollars that have been sitting overseas for decades, they start coming home. And when they come home, they create inflation, real inflation. Not the kind of inflation where your grocery bill goes up 3%. The kind of inflation where your purchasing power gets cut in half. And that's when people panic. That's when they rush into hard assets. That's when gold and silver go parabolic. But here's the thing. By the time most people figure this out, the easy gains are gone. The gold that's trading at record highs today, it's going to look cheap compared to where it's headed. Let me show you what's happening in the physical market right now. Because this is where it gets really interesting. The COMEX, which is the major exchange where gold and silver futures are traded, is showing signs of stress. The amount of physical gold available for delivery is shrinking. The ratio of paper claims to physical metal is expanding. And when that ratio gets too high, something breaks. We saw this happen in 2008. We saw it happen in 2011. And we're seeing the early warning signs again right now. Here's what happens. Traders buy paper contracts thinking they can always convert them to physical metal if they need to. But when everyone tries to do that at the same time, there's not enough physical metal to go around. And that's when the price explodes. Silver is even more interesting, because silver isn't just a monetary metal, it's an industrial metal. It's used in solar panels, in electronics, in medical equipment, and the demand for silver in these applications is growing faster than the mining supply can keep up. So you've got investment demand increasing, you've got industrial demand increasing, and you've got a supply that's relatively fixed. That's a recipe for a massive price move, and we're already seeing it. Silver just hit an all-time high. But here's the crazy part. Even at these record prices, silver is still historically cheap compared to gold. The gold to silver ratio is still elevated, which means silver has even more room to run. Now, I want to take a quick detour here because this is important. If you're sitting on $100,000 or more in retirement accounts, you need to understand how gold IRAs work. I put together a free guide that covers exactly how to get physical gold into your retirement account without triggering tax penalties. It's in the description below. Worth checking out if you're thinking about protecting your retirement savings with real assets. All right, back to what's happening in the markets right now. Geopolitical tensions are rising. We've got conflicts in multiple regions. We've got trade wars heating up. We've got countries choosing sides in a new Cold War between East and West. And every time geopolitical tensions rise, what happens? Money flows into safe havens, into assets that can't be printed, into assets that have held value for thousands of years. Gold and silver aren't just going up because of inflation. They're going up because of uncertainty, because of fear, because people are starting to realize that the financial system they've trusted their entire lives might not be as stable as they thought. Let me tell you about what happened in 2008. When Lehman Brothers collapsed, gold was trading around $800 an ounce. People thought the financial system was going to implode. They thought banks were going to fail. They thought their money wasn't safe. And what did they do? They bought gold. They bought silver. They bought physical assets that they could hold in their hands. Gold went from $800 to $1,900 in less than 3 years. That's a 137% gain. And the people who bought early, who understood what was happening before everyone else, they made life-changing returns. But here's what most people don't realize. The 2008 crisis was just a preview. It was a warning shot. The central banks stepped in with massive stimulus. They printed trillions of dollars. They bailed out the banks. They kicked the can down the road. But they didn't fix the underlying problems. They just made them bigger. And now, those problems are coming home to roost. The debt levels are higher than they've ever been. The money supply has exploded. The wealth gap has widened. And the trust in institutions is eroding. This is why gold and silver are breaking out right now. This is why central banks are accumulating at record levels. They know what's coming. They're preparing for it. And you need to ask yourself, are you prepared? Let me show you something else that's happening. The World Gold Council just released data showing that central bank purchases are at their highest level in decades. These aren't small countries buying a few tons here and there. These are major economies, major central banks, buying hundreds of tons. Why? Because they're diversifying away from the dollar. They're reducing their exposure to U.S. Treasury bonds. They're building reserves of real assets that can't be devalued by a printing press. And when central banks move, they move slowly. They don't panic buy, they accumulate over time. Which means they've been planning this for years. They've been positioning themselves for what's coming next. Now think about what this means for the price of gold. If central banks are buying hundreds of tons every quarter, and if investment demand is increasing, and if the mining supply is relatively fixed, where does the price go? It goes up. It has to. It's simple supply and demand. But here's where it gets even more interesting. Most of the gold that's ever been mined is already owned by someone. It's in jewelry. It's in central bank vaults. It's in private collections. It's not available for sale at current prices. So when new buyers come into the market, when investment demand increases, the price has to rise enough to convince existing holders to sell. And right now, with everything that's happening in the world, existing holders aren't selling. They're holding. They're accumulating more. This creates a squeeze, a supply squeeze. And when you have a supply squeeze in a market with inelastic supply, prices can move very quickly. We're seeing the early stages of this right now. Gold is making new all-time highs. Silver is making new all-time highs. And the momentum is building. But most people are still on the sidelines. They're waiting for a pullback. They're waiting for confirmation. They're waiting for someone to tell them it's safe to buy. And by the time they get that confirmation, the easy money will be gone. Let me tell you about a concept called the debasement trade. This is what strategists are calling the current move in gold and silver. The idea is simple. When governments print money, when they debase their currencies, hard assets go up in value. Not because the assets are becoming more valuable, but because the currency is becoming less valuable. Think about it this way. If you have a pizza and you cut it into 8 slices, each slice is 1/8 of the pizza. But if you cut that same pizza into 16 slices, each slice is now 1/16 of the pizza. The pizza didn't get bigger. You just divided it into more pieces. That's what happens when governments print money. They're dividing the same amount of economic output into more units of currency. Each unit becomes worth less. And gold and silver, they're the pizza. They're the real asset. They don't change. But as the currency gets divided into more and more pieces, it takes more pieces of currency to buy the same amount of gold or silver. This is what's happening right now. This is why gold and silver are breaking out. This is why the debasement trade is back on. And here's the thing. This isn't going to stop. The debt levels are too high. The political will to cut spending doesn't exist. The path of least resistance is to print more money, to inflate away the debt, to debase the currency, which means the debasement trade is just getting started. Now, let me talk about what's happening with silver specifically. Because silver is in a unique position right now. Silver is used in solar panels, and the world is transitioning to renewable energy. Countries are setting ambitious targets for solar installations. Companies are investing billions in solar infrastructure, and every solar panel requires silver, about 20 grams per panel. That might not sound like much, but when you're talking about millions of solar panels being installed every year, it adds up fast. The Silver Institute estimates that solar demand for silver will increase by 85% over the next few years. That's massive. That's a structural shift in demand that's going to put pressure on supply. And here's the kicker. Silver mining is already struggling to keep up with current demand. Most silver is produced as a byproduct of other mining operations. It's not economical to mine silver by itself at current prices. So you've got this situation where demand is exploding, supply is constrained, and the price is still relatively low compared to historical norms. That's a powder keg waiting to explode, and we're seeing the early signs of it right now. Silver is up 140% this year. It just hit an all-time high, and the momentum is accelerating. But here's what most people don't understand. Silver is more volatile than gold. When it moves fast. It can double or triple in a matter of months when the conditions are right, and the conditions are right now. Let me paint you a picture of what could happen next. Imagine investment demand continues to increase. Imagine industrial demand continues to grow. Imagine the supply squeeze gets tighter. What happens to the price? It goes parabolic. It shoots up so fast that people can't believe it. And by the time they realize what's happening, they've missed the move. This is what happened in 2011. Silver went from $18 to $49 in less than a year. That's a 172% gain in 10 months. And the people who were positioned early, who understood the fundamentals, they made incredible returns. We could be on the verge of a similar move right now. All the pieces are in place. The fundamentals are there. The technical setup is there. The momentum is building. The question is, are you going to wait for confirmation? Or are you going to position yourself now while the opportunity is still in front of you? Let me tell you what the smart money is doing. They're not waiting. They're not trying to time the perfect entry. They're accumulating. They're building positions. They're preparing for what's coming next because they understand something that most people don't. In markets like this, the biggest risk isn't buying too early. It's not buying at all. Think about the people who waited for a pullback in gold back in the early 2000s. Gold was at $300. They thought it was too high. They waited for it to come back down. It never did. It went to $1,900, and they missed the entire move. Don't be that person. Don't let this opportunity pass you by because you were waiting for the perfect moment. The perfect moment is now. The Great Reset has begun. The monetary system is transforming, and gold and silver are leading the way. Central banks know it. Institutional investors know it. The smart money knows it. Now you know it too. The question is, what are you going to do about it? Are you going to sit on the sidelines and watch, or are you going to take action? Because this isn't going to last forever. These opportunities, they come and go, and when they're gone, they're gone. Gold is at all-time highs. Silver is at all-time highs. The momentum is building. The fundamentals are strong. The technical setup is perfect. Everything is aligning. Everything is pointing in the same direction. And the people who understand what's happening, who see the bigger picture, they're positioning themselves right now. Don't wait for the mainstream media to tell you it's okay. Don't wait for your financial advisor to give you permission. Don't wait for the perfect pullback that might never come. The Great Reset is happening. It's live, it's real, and it's accelerating. The only question is, are you going to be part of it? Or are you going to watch from the sidelines as the biggest wealth transfer in history unfolds? The choice is yours. But the window is closing. The opportunity is now. Gold and silver are breaking out. The institutions are accumulating. The fundamentals are screaming. And the technical setup is perfect. This is your moment. This is your chance. Don't let it slip away.